Today we're going to be talking about contrarian thinking and how it can sometimes trip you up. I mean, many of you know one of the things we do in penny stocks is we try and recognize inefficiencies in the market, but at some point you can get a little too biased the wrong way and really get in trouble. And today we're going to try and keep you out of trouble. Hey everyone, before we get started, be sure to like, subscribe, share, and ring that bell if you're on YouTube to be notified as soon as we drop a new video. All right, that being said, I am lead trainer with StocksToTrade, Tim Bohen here. Today we're going to be talking about the trend and trend following and trying to go contra the trend. Many of you may be aware of The Turtle Traders, a great book by one of my friends and very inspirational author Michael Cavell. Definitely check out Trend Following and the Turtle Traders books. Actually interviewed him on the Steady Trade podcast. It was a great podcast. But that being said, what that book went into was kind of the nature versus nurture mindset. And just to give you a brief introduction of the concept, the idea was there were two very successful traders and they kind of went back and forth on whether trading was an innate ability or if it could simply be taught. And ultimately, they proved in their sample set, at least, that it could be taught. It is a skill that could be learned. And the skill they taught people was simply following the trend. And I know that sounds so simple, but basically you're looking to buy stocks, or traded a lot of commodities that are steadily trending higher. And when we say that, it's simply higher lows and higher highs, stocks that are trending up on those candles, those green candles. And when they do have red days, it's not a colossal red day. They're just holding that trend. And then vice versa, they're shorting stocks or commodities that are steadily trending lower. And again, I know that sounds so simple, but one of the biggest situations I see where people get tripped up is, they're shorting, particularly right now, steadily uptrending stocks because they fall in love with the thesis. And I mean, listen, AMC is the example of today. You can look at GME, GameStop, okay? AMC movie theaters, GameStop. If you're watching this video a year or two down the road, they're probably both out of business, or they've filed bankruptcy and they've been bought up and respun or something. But the equity, the stock trading today, AMC trading at $58, a couple years from now, it's probably going to be worth zero or pennies on the dollar. But that doesn't, the fact that what we run into right now is people are trying to short against the trend. And I mean, look at this stock. I mean, this thing started uptrending with the meme stonk mania, back in January when it went from 2 to 20, then kind of consolidated and didn't do much. But then look at once we rebroke out at 19, grinds higher, all the way up to 72, pulls back a little bit. And here we are back at 58, only $10, $12 a share off of all-time highs. And there's been, hedge funds, billion-dollar hedge funds that have gone out of business or have had to take more equity infusions, sell more share of their business just to stay alive because they tried bucking the trend. And I think that, listen, if a billion-dollar hedge fund is blowing up, do you think you're going to be able to capitalize on fighting the trend? So what I want you to look for is just these steadily uptrending stocks. I mean, we don't talk about short selling much on the channel. I do have several videos. You can check them out. But at the end of the day, most of you are new and you've probably got a cash account, which means you can't short. And if you do have a margin account, you're probably under the PDT, which really limits how many times you can trade. So the biggest strategy I want you to focus on with that small account as that newbie trader is looking to reuse your cash to go in and out of these stocks and build your account up. And then when you're more consistent, when you've got a foundation, you're steadily increasing your account, you're profitable, then start trying to branch out and start shorting stocks. But we see so many people that try it too early. And in 2020 and 2021, billions and billions and billions have been erased by people fighting the trend in these meme stocks. Then I think about, I'll understand where the market is. I mean, bring up a chart, a 5-year chart of the S&P 500, okay? Well, actually, I'll bring it up for you. Why don't we do that? There's a good idea, Tim. Why not show the people? Anyway, I mean, look at the 5-year chart of the S&P 500. Sure, we had a rocky day, back in 2020. But, I mean, really the only time the trend has been broken considerably is when coronavirus broke. I mean, you can't, in my opinion, I hate to say ignore putting my hand over it so I don't have to look at it. But I mean, listen, we hopefully only get a global pandemic once a century. You look back to, the early 1900s, etc. And I mean, it only comes around once in a while. And if you look at the trend outside that, the stock market is just steadily uptrending for 5 straight years. This is not the environment to be shorting. Now, when I got started actively day trading, it was 2007, 2008 during the financial crisis, and the trend was down for 18 months. That's when you look to get short. Join that trend. And listen, hopefully you don't take this the wrong way, but you're new, you're inexperienced, you're not gonna beat what the big boys, what the billion-dollar Wharton and Harvard grads are doing. Now they may win in the end, but they have so much capital that they can withstand these squeezes up. I mean, think about the quote, the market can remain irrational longer than you can remain solvent. And if you've got a couple $1,000 account or a 10, or even let's say you are over the PDT, you've got a $30,000 account, you get caught fighting the trend and it's all over. Next thing you know, you got $2,000 in your account and you're retired. Because you can't, it's so much harder to build that back up. So follow the trend, follow the S&P 500, follow the Dow Jones, follow the sectors. One of the big things we do in the Steady Trade team, which check out the link below to join the Steady Trade team, 2 webinars a day, every single day. We get into so much detail, but we have tons and tons of spreadsheets where we're tracking sectors. Okay, so we're looking for those hot sectors to join the trend. And when you've got something, I mean, the greatest hot sector in my 15 years, which is still going on, is the electric vehicle sector. And I think back to the beginning of the pandemic when Tesla was exploding and we had, I think we had 30 tickers on that list, $1 stocks, $10 stocks, $20 stocks. And you can use that index that we build in the Steady Trade team, for lack of a better term. I call it an index. It's not an actual ETF or an index, but we can track those trends and then look to join those trends. And then when they reverse, which, hey, simple fact is, Tesla had a rough early part of the year in 2021, and all of the EVs were trending lower. That's what you're looking to do. I'm not against short selling. I think it's a very viable strategy. But again, look at this chart of the S&P 500. Here we are, pennies from all-time highs, all-time highs since the index began. I mean, 100 years, is that the environment to be short? Or is it the environment, back last February when the world was quote-unquote ending? So check out Trend Following by Michael Cavell. Check out the podcast, the Steady Trade podcast with Michael. Great book. Again, he's got a bunch of amazing books. He's got a great podcast as well. Check it out. I'm always looking to give you as many resources as possible to learn from. And be a contrarian thinker, okay? I want you to think differently. To quote one of my idols, Steve Jobs, think differently. Don't follow the mainstream media, okay? Be a free thinker. Come up with your own trade ideas, your own theses, your own patterns, but recognize, and I'll end with my absolute favorite all-time quote of trading quote of all time. Man, I'm dropping the quotes like crazy in this video, but Jesse Livermore from Reminiscences of a Stock Operator, he said, and this is the best trend following quote ever. He said there's a time to go long, right now I think. There's a time to go short during the pandemic, 2007, 2008, financial crisis, etc. And there's also a time to go fishing. There's a time when the markets are sideways, there's not much going on. Now, I would never push back on the great Jesse Livermore, but since 2016, I can't recall, here we are 5 years later, I can't recall a slow period. I mean, I'm recording this video in the middle of June, and it used to be summers were slow, particularly August. August was always the doldrum month when back to school, and a lot of Europeans take the whole month off for holiday. Everyone's getting in those last minute vacations. Last August, I don't think I walked away from this computer for 30 seconds. So, what I'm getting at is I totally agree with Jesse Livermore. There's a time to go long and a time to go short. I don't know about a time to go fishing anymore, but it seems like we never have time to do that. So anyway, have a great day, everyone. Definitely check out the Steady Trade team and use the SPY, or the ES. There's a lot of different ways to track it to look at that bigger picture idea. And if you're getting stopped out, maybe ask yourself why. Keep getting stopped, you're getting stuffed on afternoon longs. Okay, is the market downtrending? If you keep getting stopped out on morning shorts, is the market steadily uptrending? Follow the trend, do your due diligence, track your trades. Listen, when you're doing that research, when you're doing your journal, write down what the S&P 500 was doing that day. Was it up green? Was it up big? Was it hitting all-time highs? I mean, that is an indicator. When people see all-time highs, this, even if you're new. Again, the mainstream media, every time the market hits all-time highs, it's going to be a lead story. They're going to be talking about it. That brings FOMO. That brings more traders. So that being said, have you been fighting the trend? Let me know in the comments below, or are you looking to join the trend? And as always, definitely check out the Steady Trade team, and we'll see you next time.